Hello, wonderful traders. Dadas here, speaking to you from the Dadas trading room on Discord. You're sincerely invited to my Discord server, and we're going to do the daily recap for today. Now, generally, as we can see here, let's look at the charts. Mm, let's get where we're supposed to be, right there. Uh, we can clearly see what the market has done today. I mean, on the DAX 30 index. So basically, it again opened with a big gap over 500 pips, and it went down, and then it went down again on the European session, and on the American session, it started to go up and then again retracing down, now doing something which is more or less in the style of consolidation right now, and it's pretty uncertain. Well, the next thing is that the spread has been very wide today. Nevertheless, even though the spread is wide, it's still at this kind of volatility and these kind of ranges, the spread, even a 7 pip spread, is basically nothing. It's still tradable. The only thing is that it's not tradable on the Renko charts at my settings of 2.5 pips because, I sort of have the rule that the Renko bar should be at least 3 times bigger than the spread, so we would have to have like a Renko bar of 7 pips. There will have to be 21 pips minimum, perhaps 25 pips. So we would have to increase increase the range of the box by tenfold, right? So it's the next level, like. But still, it would probably work. I mean, yeah, I mean, I don't see a problem. Basically, mm, we can check that out. Instead of 250, let's put in 2050, and let's see what happens then. It has to recalculate the whole thing. I don't know if it's gonna work. Yeah, it's working. You see. So all of a sudden we have a situation that looks basically the same as it used to look when the spread was 80, so 8 pips. So basically not much change, only the number of candles, or perhaps the number of bars or candles is basically the same. So now we will be able to see the trade that I took probably even here, right? Yeah. So because you see, I took this trade, but of course I wasn't taking it out of this context. I was taking it out of the M5. So basically, what I did here is mm, figured out that this is a, a, a supply zone, right? Something like this. So we have a supply zone right here, and I figured out I wasn't actually measuring it like this. I was just figuring out that we have a supply zone over there, right? So if we have a supply zone over there, basically, the market was trying to go up, but it rejected the bullish trend, and it went down again. So it kind of broke this potential supply level, and this potential supply level over here became support. Sorry, it became resistance. So basically, this is it became a supply level right here. It became a supply level. So I figured out I would just simply go short And I was even trying to get my take profit right there. Yeah, I put my initial take profit right there, and the market did reach my take profit. So that take profit was at a level of I think 200, something like 288 pips or something like that. Yeah. Anyways, it's either because I have something in my eyes already, like I didn't see this measurement, but I had already trailed my stop right there. So basically, I kind of figured out that again that if I won't take more than 100 pips, then most probably the market is gonna take me out on my trailing stop. So here's my trailing stop, and basically 10 minutes later, or maybe not even full 10 minutes later, the market would have taken out my trailing stop exactly right there, and I would have gotten 40, 70 something pips. 70 something pips, but I actually got 115.7 pips, which is probably one of my biggest trades taken recently, right? So it's like I say, it's a completely different market right now, and no, basically. I wouldn't have anything against it if this kind of market would be going on all the time. I mean, it doesn't really matter as long as the proportions are set properly, right? So the rest can be done by the expert advisor and can calculate the risk and calculate the volumes and do everything else, right? Like yeah, here I didn't calculate anything. I simply went in at the lowest possible volume, but perhaps there is like room to take more risk right now and get in at bigger volumes. Anyways, I was studying the charts, and basically I want to show you something because you see this zone here, right? I traced this zone before this price action right here. So in other words, when the price was going down, um, after I had taken my trade, I looked at it and I thought, well, it would be a nice idea to find the potential supply zone, right? From a bigger time frame, and basically I found it. I found this very interesting zone right here, which is basically historically it was a resistance right there, and we can see supply right here, right? We can see supply that has been um, has defended itself, right? And then the market went down, and then it came back up because you see at this moment the market didn't retest that zone. Now here it retested the zone and went back down again. However, somewhere here it found demand from a demand zone that was created right at this level, and it started going up. And when it started going up, it broke through this what used to be supply zone, and then it became a demand zone, and then it was being tested from the other direction. Yeah, so it was but if you look at it closely, in neither of these wicks here actually go down to this zone. They all come, they all are trying to reach this zone, but they are not actually reaching this zone. Even though you can see that this comeback right there, from here there, it was actually also a pretty big mm, pullback in downwards, right? So somebody actually somebody was trying to come back right down here, but didn't manage to do it. And then there was a strong strong raid up or rally. It's called a rally, right? It was basically a strong rally upwards, but then the market again started doing something. Again, it was trying to pull back, right? But it didn't manage. I mean, we see that this annual candle here from 2018 is actually what we call a bearish engulfing, right? So it's like yeah. Mm, so yeah, it's a bearish engulfing candle. So it kind of signalizes that again somebody was trying to get down there, but they didn't manage again. There was some kind of greater interest that came back all the way up there, right? And actually, you know that in the very beginning, so basically during the first 2 months, so January and February, they were basically pulling up, at least at the beginning, they were pulling up and making new highs, right? New all-time highs, and there was a new all-time record, all-time high over there. It reached 13,800, 13,800, somewhere around that level. Yeah, it actually did reach 13,800, but then it all of a sudden started going down. And now, what am I trying to say? Uh, I'm trying to say that it's looking at it closely with better knowledge. It seems to me like somebody is actually taking advantage. Probably the same guys who were trying to go down right here and who are trying to do this right there, because you know how it works. I mean, I'm not talking about, simple retailers like us who are trading this market, for even if somebody has $1 million or two or five or 10, that's not really a big guy. The big guys, they operate in billions, right? Billions of dollars. Minimum half a billion. So, if we actually look at this and we think about it, then, you know, somebody, some of these guys right there had, had some pending orders placed right there, right? And basically, why are they trying to come back? Because they didn't get filled, right? They didn't get filled on those orders, so those orders are simply dormant. They're lying there, waiting for a better opportunity, right? Now, they were trying to get down here, they didn't manage. They were trying to get down here, they didn't manage. They were trying to get down, they didn't manage. Now, what happens now? There's a bubble created right there, right? There's a bubble created right there. Then comes the coronavirus. Additionally, we have 2020, when 1920 was the great stock crash, right, on the New York Stock Exchange, and one of the biggest crises in the world, right? Now look what happens here. We have 2020. There is this psychosis. There's this psychosis in the head of many people. You know, people have been, say, predicting, or, well, I wouldn't say predicting, but more like what do you call them? Prophesizing, right? Prophecies. Uh, People have been prophesizing that oh, 2020 is going to be the same as in 1920. It's going to be a total crash in the stock market, and uh, that's one psychosis. So now we have this potential psychosis, plus we get a coronavirus, which is a perfect opportunity to take advantage of social media and all the media that is available today to create even more psychosis. So in order to create, in order to create support, I mean, not like support right here, but to create, to help, yeah, to support in a sense of help those bigger guys get back down here where their interests are lying. And they don't give a shit actually. I mean, they're taking advantage of the situation because I like to be rational. I don't like to create conspiracy theories. So I'm not saying that somebody actually created the coronavirus on purpose and and feed it out to the public on purpose. No, but I am saying that the whales, you call it, not even the sharks, but the whales of this world, they're gonna take advantage of some coincidences, right? They're gonna take advantage if there are if the situation is can be taken advantage of, right? And they can actually do this, right? And they can actually do this because because it's kind of it's kind of funny. Like I knowing what I know about the supply and demand zones, and then I plot out this supply demand zone because it's actually where it's supposed to be. Yeah, and all of a sudden the market reacts exactly to the zone and reacts so strong, right? I mean, this is a very strong reaction. I mean, you should you should see this. This is like 750 pips. So it's like almost the same as the full daily range, which is 789 pips. Now, people who have been trading longer than me, and well, maybe I don't consider them my gurus, but I know that I can get valuable information from them by listening to them because they have been in this market pretty much longer than me, generally in the financial markets. And like I'm actually learning everything on my own, trying to find out information where I can. And those people were actually inside. Those people were people who actually were insiders. They actually saw that happening. They actually saw where the orders were lying, and they saw these kinds of situations all the time. All the time. So I don't believe in coincidences, fully. I mean, sure, uh, I believe in coincidences like something happens like an accident or something, stuff like that. It's stuff that are not really mm, stuff which we don't have control over, right? But things like this, where there are too many coincidences, and you know, okay, yeah. But I want to show you something else. I also took a trade here on the euro dollar, today. No, I plotted this thing. I plotted this thing here during the weekend, and basically this morning or somewhere around this morning, I decided to go long right here. Okay, I did a little bit. Well, it wasn't a good entry. At this point, I should have waited it out until the market reached or retested this zone, and then I should have got in somewhere right there, or perhaps even after this candle. That would have given me more pips, right? And even potentially, it would have given me the opportunity to simply put my trailing stop at some minimum profit, and now sit and watch what's going on, right? Why did I decide to get out of this trade? Well, because of this consolidation action. So the market was, going down, trying to go up, going down again, trying, it was behaving in a very strange way. I mean, in a very undecisive way, in a very non-trending way. And because it was behaving this way, I decided to get out of this trade, so I did. Now, as you can see, I've set up here a different template, a little bit of a different template where I'm using my older expert advisor, a very simple one. It's called the Dada's Trade Ruler Manager, where it doesn't really have much. It just has the data indicator ID, which means that it has to correlate with the appropriate Dada's trade ruler ID, and then only it takes trades based on this Dada's trade ruler, on the levels of this Dada's trade ruler, and it calculates the lot, the volume by using this percentage risk. So like 1% of the whole thing should be the risk, and the rest is just mm, mm, placement of the buttons, and then there are two possible training stop mechanisms right here. One according to the PSAR and the other one according to the MACD. Well, that was some idea I used to be testing. So basically, it's a very simple one. It takes orders anywhere you click. You can click sell or buy. It doesn't matter. Mm, so yeah, that's a simple one. Okay, so that's it for today. I think. You can see that if you join my Discord server, you are welcome here. There's a lot of channels for everyone. You can watch me live streaming, like I'm still live streaming today. Mm, you can watch me trade live. We can talk. We can do lots of things right here. You can also talk with other people if they are willing to do so. Anyways, I also encourage you to like and subscribe to my YouTube channel if you already haven't. Of course, if you decide to dislike, just be sure you make it twice. Make sure. Okay, and also all the links are below in the description of the video. I also encourage you to become my patron on patreon.com/Dada's Trading System Workshop. What are the benefits of becoming my Patreon at Dada's beginner level, minimum Dada's beginner level? Well, first of all, you get access to the Dada's Trading System room, which is only available to my patrons, right? And there you will find all kinds of materials like special videos, like the weekly recap videos that can be even 4 hours long, 2 hours long, depends, right? you can demand, ask me to discuss a certain topic, and I will then make a video about it. You can ask me then to create some tools for you, like simple indicators or even simple expert advisors, like for example this one I showed you. Um, but you need to become my patron first, right? Another benefit of becoming a patron is that all your monthly fees or pledges mm, will be accumulated, and as soon as you reach or accumulate the enough money for my 3 hours of my data trading system workshop, you can take it, or you can wait some more, and as soon as you've accumulated enough for 6 hours, you will get my data trading system for free, together with all the videos and all the instructional videos. There will also be access to older videos that might clarify something for you, or give you some other information, right? And yeah, so there's lots of benefits of becoming my patron, and I don't think, yeah, and I think it's really worth it to become one. Okay, so that's all for today. Thank you very much. Have a nice one, and see you next time.